Hello, welcome to Element of Costing. This is our third core unit. We already completed bookkeeping transaction and bookkeeping control. So element of costing is totally different from the bookkeeping control. So uh, usually is bookkeeping is all about recording the transactions between debit and credit, and element of costing actually is focusing on the different area. So the element of costing is mostly focus on material, labor, and expenses. And for example, whether it is the fixed cost, variable cost, whether it is direct cost, indirect cost. Okay, so element of costing is combined of 5 chapters. Each chapter is about 20 pages, so it is not that difficult, and it is very interesting unit, and it is really important to have a good understanding of costing. Okay, because for the job interview purposes, so usually you will be asked so many questions around costing. Okay, so the first chapter of element of costing is going to be cost classifications. Okay, so now we're going to focus on the cost classification chapter. Hopefully by completing of this chapter you have good understanding of what is the nature and purpose of the business in terms of the transaction and in terms of the associated with the accounting system. Then explain the structure of costing system. Then identifying the association between the costing and accounting system within a business. Then identifying what type of cost, profit, or investment center, because the different costs in different activity is coming from the different center. So then we will going to explain how material, okay, labor, and expenses. Okay, so material, labor, expenses. So expenses usually we call it overhead. How we going to classify it and record it? For example, for the material, where the material is going to be direct material, indirect material, labor again, direct labor or indirect labor. Then other expenses in the business such as a rent, rate, heating, light, insurance. Okay, then we're going to explain the distinguish between the fixed, variable, semi-variable. Okay, for example, what is the fixed cost, what's the variable cost, what's the semi-variable cost. This is really important, this point. Okay, the overview of the chapter is going to be fixed against the variable, what kind of cost is going to be fixed and what is going to be variable, what's the differences between the fixed and variables, how we can recognize these two types of cost. Then we're going to look at the behavior of the cost. Okay, behavior, whether it is semi-variable, fixed cost, variable cost. So then we're looking at management against finance. So you already studied management against the finance. So what is the management cost? What is the financial cost? Okay, so management and finance accounting. So in the organization you have two different teams. Okay, one team they calling management, and other one is calling the finance. So finance more actually is dealing with the outside inquiries. Management is more internal purposes. Okay, so two different teams. So we'll look at these two teams. Then we're looking at the classified by functions, element, nature, behavior. equal to 1800. Okay, therefore the fixed cost is 3000 minus 1800 is 1200. 1200. Okay, 1200. This is really important. This question is really important. You need to practice and practice this question, because this question you will have a question similar to that in the exam, and it is worth it 8 marks. It is worth 8 marks. So in the exam it give you 2 lines, says step 2, it says March, February, number of unit and the cost. It asks you to calculating the fixed cost. It asks you to calculating cost per unit. Okay, it asks you cost per unit, because obviously for the manufacturing company you have a direct cost and a indirect cost, or you have a fixed cost and variable cost. So fixed cost is going to be same no matter whether you're making 900 or 600, but variable cost is going to be changed based on the level of activity, or level of activity. If it's go up, the cost is go up. If it's go down, then the cost is go down too. So it is necessary to understand, for example, between March and February. In March we made a 900, and the cost or total cost is 3900. In February is we made a 600, and the total cost is 3000. So this 3000, it is including fixed cost, and variable cost, So in order to calculating cost per unit, so obviously you have to look at the differences between the cost, total cost. For example, for March we total cost 3900, for February 3000, so the differences is 900, and difference between number of unit is 300. So 900 divided by 300, so it is equal to £3 per unit. So for every unit we're going to produce, we have to pay £3 as a direct cost. Okay, direct cost. So therefore is the fixed cost. The fixed cost, obviously, you have to calculating, for example, 600 times 3 is 1800. So 3000 minus 1800, it means 1200 as a fixed cost. It is really important, this question, to practice as much as you can. Okay. Okay, the summary of the chapter is about it is important management information for decision making, for planning, and for control. Management, I guess finance management is more internal and finance is more external. Management for the budgeting required to making preparing a report monthly, for example, for budgeting. And finance, usually they're preparing a report annually, and they are responsible for 2 important statement of financial position in relation to assets and liability, and statement of profit and loss relating to the activity and expenses, whether we made a profit or loss. Then cost, unit and center. Okay, then cost classification. Cost classification is really important, and you need to understand what is what. Okay, because in the exam it will give you a question, and says, for example, give me what is cost by nature, direct, indirect. Okay, whether it give you says obviously is for example, it says matching. It says fixed and variable is relating to what? Is a behavior, function, element, nature. Okay, so I hope you understand something. I help you to understanding something about chapter 1, cost classification, and also I will uploading some questions and examples in relation to chapter 1. Thank you. the more cake you make, the more obviously is wages you have to pay. Then the electricity, again this is quite explained. It is going to be a semi-variable because at certain point you have to pay. Then if it is the level of activity increase, then additional cost is required. Okay, additional cost is required. Last one is high-low method. High-low method, it is one of important method it is required in production or manufacturing companies. Okay, so to do this, so number of assumptions are made. For example, total cost. What is total cost? For example, we know fixed cost plus variable cost. Fixed cost plus variable cost. Then what is fixed cost? Remain constant. For example, step cost. Variable cost per unit stays constant. Okay. So from the level of the output given, taking the highest number of units are the lowest and the associated to the total cost. Okay. So it is necessary to understanding and calculating the what is going to be a fixed, what is going to be a variable. Okay. So if we're looking at example number 5, Toby has recorded the following in the first 3 months of the year. Okay, so we have January, February, March, number of units they made, and costs. Okay, and cost. Okay, so for example, in January they made a 700 units and the cost was 3,300. So obviously if you want to calculating the cost per unit, so total cost divided by number of unit, it gives you the cost per unit. Okay, so you can see obviously is the February is they made a 600 and the total cost was 3,000, and in March they made a 900 units and the total cost was 3,900. So obviously the purpose of this 3-month activity and cost, so you can calculate it which month and how is cost of per unit are changing. So for example, if we're looking at the way, so for example it says the variable cost per units and if we're looking at step 2, if we're looking at step 2, it says between March and February. For example, March we made a 900 and February 600, and you can see the total cost is 900 difference, the 900 relating to 300 units. Okay, so you can see the variable cost is 900, variable cost 900, 900 minus 3,000 is 900, then the number of unit 900 minus 600 equal to 300, so 900 divided by 300, so is equal to 3 pound, equal to 3 pound. So then in February the total variable cost obviously increasing by how much? So says is 600, so 600 times 3 equal Fixed cost is something which is fixed, is nothing, is not going to be changed. Where the number of production is 100 or number of production is 0 is fixed, cost is fixed. Something is not going to be changed. For example, insurance, for example, rent. Okay, so fixed cost is not associated with a number of activity. Okay, not related to number of activity. Fixed cost is going to be fixed. Okay, straight line. Okay, fixed and variable cost, if we're looking at this graph, so you can see this is variable cost. So if number of production or number of activity is increased, the variable cost increase also. If number of activity is decreased, the variable cost also decrease. So obviously is the variable cost is directly associated with the activity levels. However, fixed cost does not relate it to the activity levels. No matter what is your activity level is going to be, the fixed cost is going to be straight. Okay, it's going to be straight. So semi-variable cost. So semi-variable cost obviously is going to be fixed cost plus variable cost is equal to semi-variable cost. Okay, so semi-variable cost, it means fixed cost plus variable cost. Okay, fixed cost plus variable cost equal to semi-variable. So for example, cost of electricity of the factory. So says for example you're paying £100 for electricity a month as a fixed. However, if number of activity is go up, increase, then the variable cost is going to be increase. Okay, it's going to be increase too. Excuse me. Okay, so stepped cost, this is sometimes you will have this kind of cost in manufacturing companies. These are costs that are fixed up to certain level of activity. Up to certain level of activity. So, which rise to the a higher fixed level if activity goes beyond the range. Beyond the range. For examples, supervisors' salaries. Supervisors' salaries. Okay, supervisor's salary. Okay. So combining cost classifications, so you may have noticed that you can use more than one classification at a time. Okay, for example, a factory rents both fixed and indirect. Okay, and overhead. For example, direct material are production cost and are also a variable. Okay, so it could be more than one. So if we're looking at example number 4, let's say Cherry makes cakes, classify for the following cost by behavior. Okay, whether it is fixed, variable, semi-variable, or stepped cost. For example, it says purchase of sugar used in a cake. It is going to be obviously is variable. The more cake you make, the more sugar you need. For example, wages of supervisor is going to be step. Is depending on the number of activity, whether you're going to be making 500 or making 400, so it is require more supervisors. Okay, rent of factory rent is actually is fixed cost. Wages of manufacturing staff paid. 20 people cake made, it is again variable. So the Third one is cost classification by nature. Okay, so whether it is the cost is direct cost or indirect cost. So you need to understand what cost is direct and what cost is indirect. Okay, so we'll look at the examples. For example, what kind of the materials is going to be direct cost? What kind of labor is going to be indirect cost? Okay, for example. So usually is direct cost. If we look at by element, we have material, labor, and overhead. So by nature, it says whether these three costs, which one is direct cost and which one indirect cost. So basically is material, cost of material, cost of labor is direct cost. Overhead is indirect cost. Okay, overhead is indirect cost. So direct cost is cost of material and cost of labor is going to be direct cost. Or sometimes we calling a prime cost. Direct cost, it means a prime cost. Okay, so prime cost, direct cost, it means cost of material plus cost of labor equal to a direct cost or equal to prime cost. Okay, then indirect cost, also knowing as overhead cost, other expenses. Okay, other expenses, which is we calling as indirect cost. Okay, so if we're looking at an example relating to cost classification by nature, whether it is direct or indirect. For example, it says metal used in the, for example, Drove manufacturers car classify the following costs by nature. Metal used in the production. Metal used in the production. Okay, production. Okay, so this is going to be a direct cost. Straight away, you must understand it. Okay, metal. Wages for worker assembling, for the worker, for the employees who assembling door cars. So it's going to be direct again. Wages of supervisor. You always, supervisors' wages are indirect cost because this supervisor is responsible for multiple tasks. So therefore we cannot allocate it as a direct cost. Glass used in the production. Glass used in the production of cars. Again, this is going to be another different material used to making a car is going to be direct cost. It says rent. Rent again is probably is rent for whole factory. Okay, so this is going to be indirect cost. So because in the factory you have a human resource, you have a IT, you have a production line, so you have a canteen. So for therefore is the cost is going to be indirect cost. Okay, this is the third one. So the last one is about the cost classifications by behavior. Whether the cost is going to be variable, whether the cost is going to be fixed or semi-variable cost. Okay. First of all, what is the variable cost? Variable cost, it is relating to production units. For example, if the number of the production unit increase, the variable cost increase. If you're making a tea bag, if you're making 100 tea bags, probably you need a 10 kg of tea leaf. If you're making 200, so it means you need a 20 kg leaf. So if the production unit is go up, the cost also is go up because you need more material. It require more labor hours. It require more labor hours. So variable cost is relating to the number of unit. If number of units go up, the cost is go up too. Okay. So first of all, we focus on the functions, production, admin, distribution, finance. Okay, so these four type of um, example of the functions. So if we're looking at this example, it says OGLTD makes a breakfast cereal. Classify the following codes by functions. Okay, by functions. So we know the production, we know admin, distribution, finance. What kind of cost relating to production, whether it is material, labor, supervisor, and rent? For example, it says purchase of material for the making a cereal is going to be production. Okay, depreciation on what is delivery van. What's delivery van? Okay, delivery, it is relating to distribution of product. Distribution of product. Then it says purchase of paper for the head office. Who is working in the head office? Usually the admin. Okay, usually administration people is working in the head office. Okay, not production line. Okay, it says wages of staff who work in human resource department. Okay, human resource department, obviously it is going to be admin team. It says interest paid on overdraft, on loan. So interest paid, it means there's going to be finance cost. Okay. The second, cost classification by element. Okay, so element is, we have a three type of cost by element: material, labor, overhead. Okay, so you need to distinguish between what is cost of material, what is cost of labor, and what is the overhead. Usually is material is which is directly is using for making a product. Labor, it is cost of employees who directly is making a product, responsible for making product. So labor could be including the overtime pay, basic pay, and commission and bonuses. Okay, so we will explain what is the overtime and what's the commission and bonuses, okay, later on in the chapters 3 and 4. Then the third cost is going to be overhead. Okay, so material, labor, overhead. Material is material, use it for making product. Cost of labor, for cost of those employees who directly involving in making a product. And overhead is going to be other expenses in the business, such as cleaning, advertising, heat and light, rent, rate. Okay, so let's looking at another example relating to cost classification by element: material, labor, overhead. Say purchase of tea leaves or tea bag. Okay, this is going to be production. It means relating to the production is going to be the material. Distribution of factory is going to be other expenses, is going to be overhead. Rent is going to be other expenses, overhead. Paper used in tea bag production, is relating to the material. Then wages for staff who makes tea bag is going to be labor. If it says wages for the staff in the HR, okay, HR, or wages for staff, or wages for supervisors, supervisor is responsible for a number of line and department, is going to be overhead, other expenses. So that's why the manager is obviously is responsible for investment center in each different center. Okay. Number 4 is mostly is relating to the cost classification. Okay, relating to the cost classification. The cost can be classified in collecting into the logical groups in different ways. So usually we have 4 type of the classification, whether it's functions, element, nature, behavior. So each of them, they have a different groups. Okay, so in the exam you will have a discussion. In the exam you will have a question like that. It says, for example, it says, give me 2 examples of cost classification by nature. Provide me with an example of the cost classification by element. Okay, so they ask you to identify, to understand what is what. Okay, so for example, element cost classification by element, so usually is relating to the material, labor, and overhead by nature, whether it is direct or indirect cost. Okay, so we therefore separating the cost into the following type. Okay, cost of sales. Okay, cost of sales. So this is the first one by fractions. Okay, so by fractions, okay, we have a production, admin, distribution, finance. Production, admin, distribution, finance. Okay, so the cost of sales, for example, if you're a manufacturing company, so you're making a product, and this product is going to be sales by different teams. Okay, so usually you have a production cost. So cost of sales usually known by production cost. This category could include the production of labor, okay, material, supervisor's salary, and factory rent. Okay, factory rent. So cost of labor, cost of material, cost of or supervisor's wages, and rent of the factory. This is cost of sales. Selling and distribution, this is could be including advertising. Okay, so you need to make advertising if you want to for a particular units. Okay, then distribution, including a delivery cost. Okay, including sales team commission and wages. Okay, the third one, administrative cost. So usually in the department you have a HR, human resource team, you have IT teams. Okay, so they have a different cost and they're doing different things, so which is totally is different from the cost of the selling and distribution. And last one is finance cost. Okay, finance cost refer to money what we paid for providing the finance. For example, bank. Okay, for example, you go to the bank, you're getting a loan for a particular department for making a particular units, and you pay the interest. Okay, finance cost obviously equal to the interest charge on loan. Okay, so finance cost equal to the interest charged on loan. Okay, so if we're looking at one example, obviously this chapter is mostly about fraction, element, nature, behavior. Okay, first of all, so The second statement is statement of the profit and loss. This statement is more focused on the activity of the business. For example, the level of the incomes the business generated and how much the expenses. So they will calculating whether they made a profit or loss for the period. So the financial accounting responsibility of them is to gather historical record. From the historical records, you're going to preparing statement of financial position, what you own, what you owe, asset and liability. Then the second statement, preparing a statement of the profit or loss. So whether the business is made a profit or loss for the period of the activity. Okay, so this is all about the financial accounting. Okay, so the second part is management accounting. Who is management accounting? Management accounting is more relating to the internal matters, internal for the inside purposes. Okay, for example, preparing budgeting, calculating the cost. Okay, calculating cost of the material, calculating cost of labor. For example, if they made we want to calculating and understanding the cost of particular units. Okay, they are going to make. Okay, so management accounting is preparing a monthly report. However, financial accounting is preparing annual report. Okay, but management accounting more about the preparing a monthly report and for the internal purposes, and one of their reporting is and responsibility for the report is about the budgeting, preparing budgeting. Okay. Third point from chapter 2 is about the cost, profit and investment center. So we have a cost of the unit, profit and investment centers. First of all, what is the cost units? So imagine if you are a manufacturing company, so you're going to making tables. Okay, so you need to understanding for each table you're going to make how much material it require and what is going to be the cost of labor. And then also you have additional costs, the additional costs such as the cost of heating and light, insurance and rent and supervisors wages. Okay, so these is going to be cost unit. Then cost center, as part of the business you can separately determine, okay, to understanding different cost center. Okay, so imagine if you are a manufacturing car company, so you could have a number of the cost center. For example, you're going to have a warehouse of the factory, and each of the warehouse of the factory, so they have a different cost. Okay, different cost. Secondly, what is the profit center? A profit center is similar to the cost center, because in the companies you have a different department. Okay, so each department they have a different cost center. So probably one cost center is making a profit, the other one is making loss. So again, so you need to understanding and calculating cost for individual center. Investment, again, investment is similar to the profit center, but a case is when the manager of the center is responsible for the cost, revenue and the level of the investment in the asset. Okay, investment probably is going to be upgrading of the machinery. Okay, probably is going to provide an additional So first of all, purpose of management information. Why we need information about the management? As you know, the business gather information about their operations in order to understand the cost, in order to understand what is the sales figure and get even point. Okay, so for every manufacturing cost, they purchasing material, they paying for the labor, they paying for the other expenses such as rent, heating, light, insurance. Then after completing the product, so they need to understand what is the total cost and for how much are they going to sell it. Okay, so it is important to understand that having all necessary information in order to calculating the sales figure. Okay, so that's why important to collecting all necessary informations. Okay, and again, the gathering information is allowing a business to making a decision, whether the decision is going to be a short term or long term. Okay, so these decisions is allowing to understanding cost of the material and cost of the labor again. Okay. In terms of the making a planning, so the business has a look forward and they have a strategic decision making for the future. So these strategic decisions for the future, it require information, it require some sort of the data analyzing, and these data analyzing could be gathered by the management team and the finance team. Okay, so also it's important in terms of the controlling the management, also be concerned with how the business as actually is performed. Okay, how the business is performed. So in term control, so in term of the budgeting. Okay, for the term of the budgeting. So first of all, we need to understanding what is management, what is financial accounting. In the business, usually we have two type of in the business usually we have two type of the management and financial accounting. So these two teams are really important team. They are making critical decisions in terms of the future planning. Okay, so for example, as I explained, it is finance accounting involve a production of the financial accounts, which are more dealing with the historical record, of the organization and the transactions. So the financial accounting is more dealing with the external issues, such as providing information for the shareholders, providing information for the community and local government, and publishing a financial statement, okay, as annually. So one of the main requirement of the financial accounting is preparing the financial statement. Okay, so in the organization, whether it is a small size, medium size, or large size of organizations, so you need to publish in your statement of financial position. So you already know what is the financial position. Financial position all about the balance sheet, and balance sheet is about the assets and liability and equity. Okay, so you need to providing information what you own